Top of the morning, friends and fellow traders. It is February 15th, 2018, and this is Doug Campbell with Right Way Options and the morning market preparation video. So, nice bullish action yesterday. Bulls finally got engaged, pushed these indexes up. I do want to caution you, however, that we are rallying toward levels of resistance. Now let's take a quick look here. You can see we had a really nice move yesterday in the Dow, and that was repeated in the SPY. SPY moved up nicely, breaking this resistance level here. The Qs had a beautiful move yesterday, running into another level of resistance here at the end of the day. But is showing a gap up this morning. Let's go back here and take a look at these indexes with some moving averages on here. And here's my concern is we're going to gap up, and the Dow right now is currently suggesting, and of course we still have a lot of news to come out, but is suggesting a gap up of over 200 points and right around the 50-day moving average. So let's keep in mind that if at the market open in the last 5 days, that will place us, let me get down here, that will place us up somewhere around 17.5% in just 5 days. And we're running into resistance levels. So be really careful when you're thinking about that. You know, there's a lot of emotion around a big gap up like this, and we'll tend to that emotion will well up in this whole idea, this fear of missing out. And that fear of missing out is a very strong emotion that will cloud many traders' judgment. We will get involved in the drama. We will race in or chase in, and we'll fail to look at what the actual market is showing us. 5 days up and a 17% gain in 5 days is wonderful. It's a nice relief rally, but it's also right exactly at the point where we could get a pullback. So be very, very careful about chasing into the market. Now, hopefully we won't see that occur. Hopefully, if I had my way, if I were a king for the day, and we king of the market for the day, we would rally up into here, break above that 50-day moving average, and rather than pulling back, we just consolidate into nice tight area. Now, I expect that area will be a little bit wider than I would like it to see, just because volatility levels are so high. But if we moved up in this area up here, broke through that 50 and then just rested up here, that'd be almost a perfect situation. But let's keep in mind, we could easily see, after we get up in here around this 50, we could easily see those profit takers come in. So be careful, be careful, be careful. V-bottoms, a full-on V-bottom is very rare. It's much more typical that we get some kind of a pullback to at least a higher low, or hopefully not that full-on W bottom that could occur right in this area. So be careful. Just remember, don't chase when we're banging or going to bang our head directly into resistance. You could be buying exactly at the point where profit taking starts happening and a pullback occurs. So be real careful of that. The SPY, exactly the same thing, gapping up toward that 50-day moving average, that would be clearly the point. We've traveled from the 200 back to the 50 for resistance, so that could clearly be the point where traders will finally say, you know, I need to take some profits, and we see this stall or pull back. So be real careful. Now the Qs, on the other hand, the Qs is showing lots of strength and has gained leadership of the market, breaking above the 50-day moving average. Now we are hitting this level of price resistance right in here. Let's go back to the naked. This little price resistance right here on my naked chart, and you can see how clearly that is easy to identify here. But we're showing strength yet this morning, gapping up through there. So we want to watch this closely. A gap up here, any failure pattern could be that clue that we're going to see a little pullback or a little profit taking. Again, here the Qs, if we were to measure from our low here in the Qs to the current gap up open, we're up over 13.5% in just 5 days. So keep that in mind when you are planning your day forward. IWM, on the other hand, IWM had a really nice rally yesterday, and it was nice to see that it finally came up and started to respond. But let's keep in mind that IWM is still, even with a gap up this morning, still well below the 50-day moving average. Notice that 34 EMA has crossed down below the 50. And if we take a look, go back to my naked chart here, we're going to slam right into a level of resistance here in IWM as well. So be very careful as you move forward. Now, one real positive thing yesterday is that the VIX finally broke down. We broke down from this little pennant type pattern that we were drawing here, little wedge pattern. Sellers finally came in here, a little bit of calming in the market. So that's bullish. That's positive to see that pullback. But let's also remember we're a long ways away from where we once were in the market down here, you know, in around the 10 handle area. We're double that around the 20 handle area. And so continue to expect higher than normal volatility, bigger price swings, fast price action. Whipsaws are very common in volatility situations like this. So keep that in mind as you plan your day as well. Let's take a look at T2122. T2122. You can see how far we have recovered sharply, just straight back up on T2122. We held this bullish reversal zone down in here, held that, and now we're rallying up toward this bearish reversal zone, and we've done it in very quick order. So a 200-point gap up this morning could easily put us up in that bearish reversal zone, up in this area. And we'll want to keep that in mind. That's a very quick recovery. And, you know, V-bottoms are not normal. So we would, they do happen, but they're not common patterns to be seen in the market. So this rally back up, watch this right in here. We could start seeing some profit taking. Again, I hope that doesn't happen. I hope we get more of a rest in this area, but I sure wouldn't bank on it at this point. You know, all the signs are pointing to those resistance levels. Diamond, SPY, IWM. The only one that's bucking that trend is the Qs, and we'll have to kind of keep an eye on the Qs as it is above the 50 and could be the leadership that lifts this entire market back above that 50, which would be wonderful. Okay, let's take a look. There's a huge amount of reports on the economic calendar today. I mean, we're slammed in here today with jobless claims, Philly Fed survey, PPI, Empire State, industrial production. There's a housing market index number, and then Treasury International at the end of the day, plus just a bunch of bond actions and things. Now, most of these numbers are expected to come out pretty good. We could see these move around just a little bit, but by and large, they're expected to be pretty good. So as long as we don't have that fear of inflation creep up here in any of these that we're overheating in the market, I don't expect any major damage ahead of the market open this morning. We also have a huge number of earnings this morning, about 170, just over 170 companies reporting earnings today. Obviously, that can create, you know, significant volatility. We need to pay attention to that. That significant volatility can move us really quickly in either direction. So if we start seeing a slew of bad earnings, which I am not expecting, earnings have been coming in by and large pretty good. So as long as they continue to do that, that supports this rally in the market off these lows. So with that, everyone, hey, I want to wish you all a fantastic day. Do me a favor, click that subscribe button on YouTube and the follow me button on Facebook if you happen to be watching the video there. Click those thumbs up buttons. I really do appreciate that. And please feel free to share this video with any friends and family that you may think would find this useful. Remember, everyone, I just do this as part of my daily preparation, and I just happen to share it with the public. I believe preparation is far more important than anything else that you do. Preparation and planning. And if you're prepared for the day, you set your mind in the right place and avoid the emotion and getting caught up in the drama of the day. So take a minute, do a little preparation, look over the key important things for your trading, and I promise you that will help you trade better. Everyone, take care of yourselves, have a great day, and I will talk to you all very, very soon, bright and early Friday morning. Have a good one.